in a particular situation, as a blanket statement, should you sell your rent control units um, to liquidate them and potentially place your money somewhere else? I think that's really like kind of a case by case question. Hello, and welcome to this week's episode of the Real Estate Investors Club podcast. I'm here with a returning guest, Chauntelle, who has some questions for me, sort of, more macro questions about inflation, financing, dealing with rent control, things like this that might affect people investing in Quebec sort of in a macro way. So Chauntelle, thanks for being with me.
Thank you, Terry.
Do you want to just, give our audience like a real quick sort of 2-line intro on who you are and like where some of these questions come from?
Okay. I'm Chauntelle. I'm a real estate investor. I've been working with Terry now for the past 5 years. And I own a duplex and I'm a landlord.
Yeah, absolutely. And so just the other little thing you can know about Chauntelle. So she actually lives in Alberta, and the duplex, the property that she owns, is in Montreal. So she invests in Quebec, although she lives outside the province. And so sometimes we end up having conversations that are a little bit sort of zoom out because the laws, let's say from Alberta to Quebec, are not exactly the same. So as you know, a product of kind of an off-camera discussion, Chauntelle, I think your first question was something about how landlords can protect themselves against the high cost of inflation. Did I get that right, or did you want to add something to the question?
No, you've got it right. Yes. How can they protect themselves given the high cost? Because everything is really expensive nowadays.
Okay. So I think you kind of need to separate the way in which inflation affects assets. Okay. So for sure, like the costs that you're paying, operating costs that you're paying out of pocket will for sure go up. All right. So like, your construction guys, maybe your property manager, heating costs, all of those things are inflating at whatever the inflation rate is. So things have calmed down a little bit now, but like we've been running, 8 to 10% inflation, and then the inflation on construction and materials and heating costs has been way beyond that. So I think the answer is that like landlords are bearing a certain amount of the brunt of that. Okay. But now one also has to understand that rents will have their own inflation tied to them. And in a rent control environment like Quebec, we can only increase our rents as a certain percentage, which is not very large. But for example, this year, the TAL has allowed additional increases based on inflation. And because the numbers that, like, let's say, you had to do some work on your property that would have cost 5 years ago, would have cost you 5K, this year cost you 10K. Well, the number that you're plugging into your rent control form is going to be 10K. So even though it's a small percentage of that, you are going to recover some of that. Now, the other thing to understand is that rents are inflating like crazy, but rents of vacant units. Okay. When you have occupied units with a tenant who's staying in there, you're stuck with the rent control laws. But if you have a tenant that leaves, that's kind of a gray zone where you can adjust your rent to market. Now, there are laws about that. There are, other certain in the industry, there are ways of, massaging that, getting around it, increasing maybe a little bit more. But the reality is that the rental market is inflating like crazy. And it's one of those things that's inflating faster than other things. So what we see on the ground with the rental units is that, like, let's say a vacant unit last July, a vacant 2-bedroom unit last July was renting for $900 in the part of town where your duplex is. It's now at $1,200 or $1,300. So that's like a 35% increase. It's a huge increase. And so like it maybe doesn't apply to you if your units are occupied consistently. And so for the small landlord, that can be a challenge. But somebody who's a professional landlord and has maybe more units, some of the units will turn over, and that allows you to adjust some of your rents to somewhat to market. And so you're actually ahead of inflation on that in a way, because rents are inflating maybe faster than other things. Then you also have to think about your asset prices, because usually in an inflationary environment, your asset prices are also going to be going up, right? So it means that even though your monthly costs might be higher, the value of your asset is actually going up. And so at a faster rate, let's say, than your rents might be, or that in a rent control environment or something else. So and you will anecdotally know this, right? Like the Canadian real estate market has just ballooned in the last like 3-4 years through COVID, and that's a direct relationship of inflation. So if we've seen the 30% increase in the price of housing, you are definitely asset rich. Does it mean that your bank account is at this point is still poor? It's possible, but the way then to kind of get around that is because you've built this equity by doing nothing, right? Like there's two ways in which equity builds. One is that you reimburse your mortgage, the other is that your property value goes up. And the reality is that if your property value has gone up by 30% because of inflation, well, now you have access to this capital that you can borrow from the bank in order to cover some of your operating costs. Then, I mean, the other thing to consider, and this is sort of where we are now, is that in order to combat inflation, then the banks start raising interest rates. And it means that any additional money that you borrow is going to be at a higher interest rate. So, that then you kind of end up having to figure into the equation. But it's that all of these things are moving. And so even though, let's say, your operating costs might be going up, chances are your rents are also going up, your asset value is going up. Yes, your interest cost is going up as well, but you have more access to equity. So like there's kind of a way to even that out.
Okay.
Yeah. Then you also had another question about, would I advise in Quebec a small landlord to sell off their units in order to deal with rent control? Well, it's a strategy. No, I mean, like, look, when you're a rent control environment, I think is a challenge for any landlord who's looking to operate their buildings. And this is actually like kind of one of my pet peeves, or one of my main arguments with this, is that like us as landlords, we are not acting in a price control environment. So my heating costs, my construction guys, my legal fees, every cost that I pay is inflating at the rate of inflation, whereas my rent control rents are not increasing at the same rate. And so you have on the one hand, a price controlled good, which is rent, and on the other hand, the landlord is expected to pay out of pocket whatever the rate of inflation is. And so like, I mean, this is just an issue with price control in general. Now, in a particular situation, as a blanket statement, should you sell your rent control units to liquidate them and potentially place your money somewhere else? I think that's really like kind of a case by case question. Like you need to, what's the state of repair of the building? What is operating the building like? Because, if I look at, let's say, my own portfolio or my clients' portfolios, like some of those rent control buildings with very stable tenants, like you just can forget about them, right? Like the tenants, if they've been living there for 15 years, like sure, they're paying a heavily discounted fee, but at the same time, they're not calling you all the time. And it tends to be peaceful. Often it's a lot of retirees. I'd say about 50% of my portfolio is precisely that. It's like a low rent, low income sort of a thing, but retirees who've been there for 20 years. And it's extremely stable, takes very little effort to run. And like, because maybe there's not so much deferred maintenance, it's okay. Like you're running a relatively stable, well-maintained asset. You can kind of permit that to continue if it makes sense for your investment objectives. But, if you're kind of in this building phase when you're looking to, optimize or increase rents, or like, increase your building value by a whole lot, maybe a stable rent controlled building like that, where you've had the same tenants for 20 years, maybe that's not the best addition to your portfolio. Right. So I don't feel like I can really give a blanket statement to that. I think that there are, moments at which for specific landlords it makes sense to liquidate a specific asset. And if I can pass on, a piece of advice that actually early on in my career, an accountant gave me, the accountant said, like, if you look at like big investors, right, like people who own Place Ville Marie or like, these really big buildings, like an asset in a portfolio has a lifespan. So you want to hold it for a certain amount of time. You want to bring it somewhere according to your own game plan. And then at a certain point, it will be time to liquidate it. Mm-hmm. When is that time? When is that time for you and your investment strategy? Well, that needs to be evaluated kind of on a case-by-case basis. And if it's not your profession to do those kind of evaluations, definitely there are either more experienced investors or coaches or people who can sort of like put their nose into your affairs and say, okay, well, I think this might be your strategy. This should be your investment strategy given your goals. And maybe at a certain point, it is time to liquidate the asset. Maybe it's not. So it's just kind of a case-by-case basis.
I understand. Because also what I'm also hearing from you, it's also good to diversify your portfolio as well.
Yeah, I mean, again, like, it's obviously like any investment advisor is going to tell you, you need to diversify. Yeah. But realistically, when you're asking a question from the perspective of a small landlord, it might be that like you only own a condo, right, or you only own a duplex or triplex. And so like, should you diversify? Well, yeah, technically you should diversify, but for whatever reason, that's what your savings and your timing and your everything can permit. So in looking at your whole financial portrait, that then becomes a question, well, how much of your investment money do you want to allocate to real estate? How much do you want to keep in your RSPs? How much do you want to use to start a small business? Like, that's then a more general question when you need to kind of evaluate, on a broad-based case-by-case thing. Mm-hmm. Have you really been listening to the episode, or has your monkey mind been taking you off in one direction or another? Our mental habits can be our biggest assets or our biggest liabilities as we pursue certain goals. For me, the biggest performance gains have always come from training my mind. In my book, Mindful Landlord, I talk about how you can train your mind and how you can apply some of these strategies to your journey in the real estate field. The book is available on Amazon and also on its website, mindfullandlord.com. And now I'll stop evangelizing for the power of mental training and let you get back to the show. I saw that you also had kind of another question about let's say people from out of province who might not be used to the heavily rent controlled environment that we have in Quebec. Did you want to be a little bit more precise about that?
Yeah, they may not know the rules, but they definitely want to invest in Quebec because it's relatively cheaper, say, than in places like Alberta or Vancouver or Toronto for that matter.
Yeah. So basically there's no free lunch. Okay. And no, the free lunch, like what makes Quebec an attractive place to invest for people from, out of province or out of country is that our assets are relatively cheap. Why are our assets cheap? Because of rent control. So you can't say like those things kind of go together, right? And like, what do you see in a rent control environment? Well, typically you see a lot of deferred maintenance. So like a lot of our heavily rent controlled buildings are in poor shape. Maybe there's some management challenges because with the tenants in a heavily rent controlled tenant friendly environment, it's sometimes can be difficult to nip some of those operating issues in the bud. Right. But you're going to be buying discounted assets in a market that is maybe not so attractive to outside investors. And so that's what I say to people from, either Americans or people from out of country looking to invest here, or people from out of province looking to invest in Quebec. Maybe you're not going to see the same returns immediately, but it's a less competitive market, and it's a market that you can get into more easily than, looking at the outskirts of Toronto or looking at Calgary or, anywhere out west. Like there are maybe smaller, town places in rural Alberta or Manitoba or in the Maritimes. Like there are, still places that you can invest where you can get a decent return and maybe avoid the rent control environment. But if you're looking at investing in Quebec, there's definitely opportunities here. You just probably need to be very strategic in terms of either forming partnerships with people or else really understanding what are the laws and the practices on the ground that make investing here a good idea or not. Right. But the reality is that, Quebec kind of has these we call them screens, right? Like you have to operate in French. There's this idiosyncratic tenancy system. There is heavy rent control. There's deferred maintenance. So there are all these things that make this market sort of unattractive to people who want to come in from outside.
Right.
What that means is that if you are able to operate here, chances are that there's opportunities just because it's less competitive and our assets are cheaper. So
because I do get asked that question all the time. Like, you know, people who know that I invest in Quebec, they're like, how do you actually do it? I want to invest there. How do I go about it? But I'm afraid to. So what are the rules? Things of that nature. So
yeah, well, I mean, in practice, what I see is that there's a fair amount of outside money that's looking to come in through the form of partnerships, and so usually you will have some kind of an operator on the ground who will know the system, be comfortable in French, do a bunch of the operation, and then the capital comes from somewhere else, and that then tends to be one of the business models. And obviously, like smaller landlords like yourself or other people who own like condos or duplexes or triplexes, there are a fair amount of out of province owners who do own and operate that, either using a manager or self-managing.
right.
Yeah. Okay, well, Chauntelle, thank you once again for generously sharing your time and your questions with our audience. It's always so great when we get to do these live coaching calls with questions that I think a lot of people who listen to the show might have. Did I miss anything? Anything else you want to throw in there as a last minute buzzer beater?
Nope, you pretty much summed up everything. So thank you, Terrie.
All right, Chauntelle, thank you so much. If you enjoyed this episode, you found it interesting, please share it with a friend who you think might profit from it. Go ahead and share it on social media. And thank you very much.
Thank you.